Welcome back. You are watching the trading day right here on Business Television India. Topping the chart as far as the Nifty goes at the moment is a GAIL India. In fact, oil and gas names like GAIL, ONGC having quite a strong day of trade after crude crossed that $70 per barrel. Of course, a lot of uncertainty as far as the crude prices go as we await Trump's comments on Iran and more, updates from that front. Of course, on the flip side, we have OMCs under significant amount of pressure in trade at the moment. But Jay, coming on the likes of a GAIL, ONGC, what are you making of the sort of move that we're seeing today, and would you be buying into it at this point?
See, oil and gas is likely to see some bounce back from these levels because of some softness coming in the crude oil prices, and I think they are likely to correct, and these stocks are likely to bounce back. GAIL looks good. We had recommended GAIL a good bull call spread option strategies. We have already recommended book out profits as well, but then I would say that would continue to see some uptake. ONGC would like to avoid. Excuse me. As far as the OMCs are concerned, I think HPCL is one stock wherein we can see good significant up move, and the stock can climb towards levels of 315 320. What one can also have alternatively is buy 300 call options right now for HPCL. It's likely to inch towards the levels of 18 initially and thereafter 22. So 18 and 22 are the targets for HPCL 300 call option, and one can place a stop loss at 7.40.
Alright, so use the options universe to play on some of the OMC names, especially on an HPCL. Jay, lots of stocks to talk to you about, but let's get a few trading ideas from you first. What are the names on your radar right now? What are your trading strategies at the moment?
Yeah, sure. I would say that, see, from the F&O segment, I have both F&O and the non-F&O segment calls, and from the F&O segment, I would say Ashok Leyland in one stock, which has seen a good consolidation within this range of 165, 165 and a half on the upside to say 155 on the low side. Now that's 10 and a half points range. I'm expecting this range to provide a breakout on the upside because that's a wave 4 consolidation, post which we see wave 5 bounce or an up move. The momentum indicators are absolutely in the buy mode. And I think from these levels Ashok Leyland is minimum likely to do 176, 177 on the upside. So what one can do is buy Ashok Leyland in the futures, placing a stop loss right in the middle of the range, that is at 160, and target 167, 176 to 177. Alternatively, the one shot would say that one can also buy Ashok Leyland call option, which is somewhere at around say 3.7, 3.8, the 170 call option, which is likely to inch towards the levels of 8, 8.5. One can place a stop loss at 1.95 here. So I've given you both futures as well as the option strategy for Ashok Leyland. The second buy recommendation would be on IRB Infra. I think post results we saw some profit booking or coming in this stock, and thereafter this stock has been recovering based on the guidance given by the management. And technically, if you see that the stock seems to have completed a 3-wave corrective fall, and now the wave 5 on the upside seems to have started. This is quite likely to inch towards the levels of 282, 285 in the very near term. One can buy this with a stop loss of say 263. The risk reward thereafter too becomes quite bullish. It's quite 1:2. So IRB futures, Ashok Leyland futures, Ashok Leyland option. These are the three options and future strategy. One among the cash segment, I would like to say in today's trading session, especially if you see, although we have seen some profit booking coming in today's trading session in Ruchi Soya, but I think the one shows in the last couple of trading sessions, if you have seen the chart movement, I would like to compare this one to that kind of a move which we had seen in SpiceJet. SpiceJet had seen a panic bottom at the levels of say 12-13 rupees. The volumes had increased for a couple of trading sessions, and thereafter we saw SpiceJet in fact moving from 12-13 rupees to 21 and 25, and thereafter we all know it has come from double digits to triple digits. Now can something like that happen, that big happen in Ruchi? So I don't know, but then there are many bidders behind it who would like to take over the company, and the volumes which I have been seeing some expansion, and the pattern which I am seeing on the chart is quite similar to that of SpiceJet, which had happened that time at the time of bankruptcy in SpiceJet as well. So I think that this can be a recovery story here, at least for the trading purpose. I think one can maintain a stop loss at 11.50 on Ruchi Soya and target around say 20 to 21 rupees for the short term.
All right, so those are a few trading ideas there from Jay. Ashok Leyland.